Now, China's economy has grown at its slowest pace in 7 years. Gross domestic product expanded by 6.7% in the first 3 months of the year. That was slightly slower than the growth rate in the last quarter of 2015, but there were some glimmers of hope. Retail sales surged by 10.5% in March, faster than the preceding month. Investment in things like heavy machinery, real estate and infrastructure expanded by 10.7% last month, and industrial output went up by 6.8% in March. Now, TRT World's senior business producer, Azhar Sukri, is here for a closer look at what the numbers can mean. It sounds like, Azhar, it's not all bad news really here. Does it mean that China's finally out of the woods?
These numbers do spell some good news for China, there's no doubt about it. And in particular, those last three numbers that you mentioned, industrial output, fixed asset investment and retail sales, all show that the government's stimulus measures are working. But if you look at, and also if you look at the trend over the, since about 2010 of top-line GDP growth, you can see that trend decelerating and then stabilising off to where we are now. And now most analysts are saying that the government's projection of about 6.5 to 7% for this year is on track. The key question, though, is how is the government actually achieving all of this? And the answer to that is it's stimulating the economy by keeping interest rates really low and allowing the banks to lend very freely, so that companies and people can borrow to spend more aggressively. That in turn is creating problems. Zombie companies, companies that are so indebted that they're virtually bankrupt, but being propped up by the government. These sorts of companies are growing in number. The government's not really doing very much to solve that problem. So the government's keeping its foot on the accelerator, but in the process, kind of burning the engine out.
What about countries that are quite reliant on, China's economy? How does this affect the rest of the world and those countries specifically?
Yeah, I know you're particularly keen on Australia.
Australia is very conscious of what China's doing, for example.
Indeed. And if you look at the mining sector, for example, in Australia, as you know, it's been decimated by the fall off in demand for iron ore and stuff like that. Interestingly, though, the Australian economy overall is actually doing quite well because, and I keep talking about this here, it's well diversified. Other countries, though, Brazil, for example, we were talking about the political impact there earlier, but part of the component for that is this steep drop-off in its economy because of China. And we're seeing the impact on oil. Coming on Sunday, we've got an OPEC meeting. These numbers from China are probably going to be watched quite closely in that meeting, in that decision as to whether to trim output or not. So major global impacts overall.
Interesting stuff. Okay, Azhar, thanks very much for that. That's Azhar Sukri there.